Welcome to my channel, Let's Talk Money. Today we will be talking about the retirement plans for those that are self-employed or own small businesses. This plan is also known as SEP or Simplified Employee Pension, which provides business owners with a simplified method to contribute towards their employees' retirement as well as their own retirement savings. In this video, we will discuss what is a SEP IRA and how it can help you save money for retirement. Make sure to watch the entire video as I will outline the advantages and disadvantages of SEP IRA accounts. I will discuss about who can contribute to a SEP IRA, how much you can contribute each year, are the contributions tax deductible, when can you take money out, what are the benefits, advantages, disadvantages of SEP IRA accounts, and so much more. Just a quick reminder for those that haven't subscribed to my channel yet. Please support us by subscribing to our channel by liking and commenting under the videos. I do not get paid and I will not endorse any companies in this video, so the information presented is absolutely educational. Again, please consider supporting this channel. Okay, so let's get started. What is a SEP IRA? SEP IRA stands for Simplified Employee Pension Individual Retirement Account. In essence, this is a retirement account for business owners and self-employed individuals. SEP IRA contributions are tax-deductible and investments grow tax-free until retirement. Once you retire and are ready to take distributions, then you will pay taxes on the distributions. Any employer may establish a SEP plan. This includes sole proprietorships, partnerships, corporations, and nonprofit organizations. Now, let's see who can contribute to a SEP IRA. When it comes to contributions, there is a very important rule set by the IRS. The rule says that if a small business has employees who are eligible participants in the SEP plan, the business must make contributions on behalf of employees equally to the contributions of the business owner. So if the business owner has 3 employees and decided to contribute, let's say, $5,000 towards the SEP IRA account for eligible participants, then the business has to make the same exact contributions to everyone, including to the owner itself. Well, generally, employees must be allowed to participate in the plan if they are over 21 years old or older, earn at least $600 annually, and this limit is for year 2018, and have worked for the same employer in at least 3 of the past 5 years. And now let's explore what are the contribution limits. In one of our previous videos about traditional IRA, we discussed that it allows individuals to contribute up to $5,500 per year in 2018, or it allowed a catch-up contributions for those that are 50 years or older, and it is $6,500 for those individuals. With a SEP IRA, you could contribute up to $55,000 for year 2018, but obviously there are rules. The maximum contribution can't exceed the lesser of either 25% of the employee's total compensation or $55,000 for year 2018. Now, net compensation for self-employed individuals is generally the net profit from the IRS Schedule C reduced by the deductible self-employment tax. The eligible compensation limit indexed for inflation by the IRS for year 2018 is considered $275,000. Contributions are deductible as a business expense and not required every year, which is an advantage, right? Employee contributions. Well, the employees can't directly make contributions to SEP, but they can still make contributions to IRA, which is, as we mentioned earlier, the same for 2018, the same as I discussed in the traditional IRA video. It's up to $5,500 for years 2017 and 2018, or $6,500 if the individual is 50 years or older. This is the total amount the employee can personally contribute to all SEP, Roth and traditional IRA each year. Now let's talk about when can you take money out of SEP IRA account. You can withdraw or take distribution from your SEP IRA ideally in retirement, but honestly you can take money out anytime. But it's very, very important that you know the rules regarding distributions from a SEP IRA in order to avoid paying the penalty for early distribution. So if you are over the age of 59 and a half, your full distribution will be taxed as ordinary income for the tax year in which you take the distribution, and that's it. If you are under age of 59 and a half, your full distribution will still be taxed as ordinary income for the year that you take the distribution, but you will also have to pay a 10% penalty for taking money out earlier. This is one of the most important things I want you to remember. If you decide to take a distribution before you are 59 and a half, not only you will be paying regular income taxes on the full distribution amount, but you will also have to pay a 10% penalty for taking an early distribution. I would actually never recommend that you take the distribution from your SEP IRA before you are 59 and a half. The same goes for traditional IRA. There are exceptions to this rule, and I will address those in a separate video, as I promised. So really, what are the benefits of a SEP IRA? First, it's very easy to set up and administer. Well, one of the obvious reasons as well is investing money in the SEP IRA is that you can create a pension fund for your retirement. The money grows tax-free, and other advantage is that the amount that you invest each year can be a tax deduction. Also, contributions are tax-deductible, including those made to employee accounts. So you can deduct the lesser of your contributions, or 25% of compensation, subject to the compensation cap for the year that I mentioned earlier. If you're self-employed, your deduction is 25% of net self-employment income. SEP IRA can be combined with a traditional IRA or Roth IRA. And also, flexibility is a very important thing that I have to mention on the advantages. You don't have to commit to contribute every year. You can skip. Let's also look at some disadvantages of SEP IRA. It's a required proportional contributions for each eligible employee if you contribute for yourself. Distributions before age 59 and a half are taxed as income and subject to a 10% penalty. It's the same as traditional IRA. Just like traditional IRAs and 401ks, SEP IRA require minimum distributions beginning at age 70 and a half. There is no catch-up contributions for those who are 50 years or older, so that's a minus for those that those individuals that are 50 years or older, but it basically allows for a greater contribution. So I guess that's okay. No Roth version, which means you can't opt to pay taxes on contributions now and take distributions tax-free in retirement, as you can by choosing a Roth IRA. So yeah, distributions are taxed. So if your tax bracket in retirement will be higher, or if the tax law changes unfavorably, then your distributions will be taxed at a higher rate later on. Well, I hope you found this information useful. Thank you for watching this video and supporting our channel, Let's Talk Money. I hope you enjoy the information presented here and consider supporting our channel by subscribing, commenting, liking, and sharing our videos. We greatly appreciate it.